This meeting is being recorded by the host or a
Good morning, pleased to be able to run it like this.
Okay, good morning, everyone. It's Maryna Botha from SDBB, and I'm really happy to see you all here. Yes, for what we titled Not Another FICA Seminar, I appreciate that most of us are tired with FICA emails and notices and scaremongering. And perhaps after submitting your questionnaires yesterday, you really feel I've done it, I've done everything that FICA requires. What we want to achieve today is not to go through FICA legislation, not to draft you an RMCP, not to tell you that the FIC will knock on your door and impose a fine, but to concentrate on what you as an accountable institution must have in your office on your desk this morning. And then to say, if you don't have that on your desk this morning as an accountable institution, what should you do? So the aim of the talk is not a general talk about FICA, but rather practically, what does my day-to-day look like if the FIC would walk in here, knock on the door and say, we'd like to see where you are with compliance. So without more, I'm going to start with sharing a PowerPoint. And I want to just thank our marketing team that they have already, why does it not want to start my screen? That they've already given the, so I'm just struggling to start my screen. I'll just start it now, just a second. Okay, here we go. Screen sharing from start. Okay, our marketing department has shared all the housekeeping rules already in the chat. Thank you for that. What they said there is that we are making a recording of the webinar. We will make it available to you within the next day or so. And it will be available for a period of a week only, and then we take it off the general site. There will be certificates if you requested a certificate when you registered, and there will be opportunity for questions and answers, or otherwise, if we can't do it in the time that we have our session today, you are welcome to email me. I don't have someone sitting with me today to answer the questions in the chat group. So if there is time at the end, I will go through them, but if we run out of time, please forgive me for not doing the questions immediately in this webinar. But as I said, you're welcome to just then email me in that regard. Okay, I thought just to wake us up, I saw this quote on the internet. Every morning I jump out of bed, I step onto a landmine, and I realize that landmine is me. And after the explosion, I spend the rest of the day trying to put the pieces together. So if in that second line, you want to change the wording to say, the landmine is FICA, and then it explodes, and you spend the rest of the day trying to put the FICA pieces together. That's a little bit how we all feel on the moment, because of the barrage of legislation that the FIC has been pushing our way over the past few months. So what am I speaking of? You would have received the same information that we have received and that your colleagues have received. Everyone who are accountable institutions would have received various bits and pieces of information regarding changes that the FIC has implemented over the past 6 months. There are huge changes. I try to give you in this slide a little bit of a feeling of how many changes there has been since November last year. You can see it's all over the place. There's due dates all over the place. And it means that for us as accountable institutions who have to comply with the FIC, it's become very tricky, because if you change your policy documents, your RMCP in January to be compliant, you had to change it again in February to compliant. And then in March, you had to change it again to be compliant with the new laws then. So it's been an ongoing process. So perhaps don't feel bad that you feel inundated. Don't feel bad that if you think you haven't come to grips with FICA yet. Don't feel bad that you feel it is all just too much. It has been too much, and there has been a lot of changes. And it was very difficult to reach a moment where you say, okay, I've done everything that they want. So pat yourself on the back if you managed to come this far. And as I've said in the introduction, what I want to do today is to say where you should be, having a look at the screen and all the changes that they have implemented. Where should you be today to say, yes, I am compliant or fairly compliant. I've done what I can. So I will look at firstly, what must I as an accountable institution do, have in place today to be compliant? And in addressing that initial question, I will touch briefly on who are accountable institutions. In other words, who are the people to whom the FIC Act applies? What to do with this option of third-party service providers. In other words, can I use another entity or a service provider to do my FICA for me? And the other question is, where does non-compliance get me? I get a lot of questions daily that people tell me, but why must I comply with FICA? I don't even receive money in my office or in my business. So I'll touch on that briefly in our first part of the discussion. And then the second part is what to do if at the end of what we discussed this morning, I realize I, as an accountable institution, I'm not up to date. I'm not compliant. What to do? And then also I'll mention whether or not it's hard to become compliant or not. But yes, okay, let's jump onto our first question. What must I have in place today to be compliant or to consider myself compliant? And just before we touch on that in more detail, I just want to introduce to you the concept of accountable institutions. The reason why I'm spending a slide on accountable institutions are that I know a large majority of the people in our webinar this morning are estate agents and estate agencies. We've got some attorneys here, and we know we've grown up with a FIC over 10 years or so already. We know that we are defined in the Act as accountable institutions. and therefore we have to comply. But what the legislature did in December 2022, when all of us were on holidays perhaps and celebrating religious holidays and taking a break after a long year, they passed a law which, amongst other things, said there's new businesses that we're going to pull into the group of accountable institutions who now also need to comply with the FIC. So these businesses were unaware of all these FICA rules up until November last year, and suddenly they were given until March this year to become compliant. If you feel bad as an attorney or an estate agent regarding your compliance duties until present, feel sorry for those newcomers who must learn all of this in 4 months only. But the newcomers to our group of accountable institutions are life insurance businesses, credit providers. Banks have always been there, but credit providers as defined in the National Credit Act, but also those who provide credit that falls outside of the Act because perhaps of the size of the amount of money involved, or because the parties are both not defined as consumers for purposes of the National Credit Act. Certain financial service providers are now included, money transfer providers, businesses dealing in high value goods in excess of 100,000 Rand, businesses that provide cryptocurrency services where they take cryptocurrency as payment. All of those are now, those entities, those businesses are accountable institutions, and they must comply with the FIC in full. Just a short note that businesses dealing in high value goods actually catches one by surprise, because we know that in the past car dealerships had to comply with certain provisions of the FIC, and they are now have to comply with all FIC obligations. But if you think of some people who are serious cyclists, they buy bicycles that cost in excess of 100,000 Rand, then that means that cycling business is now an accountable institution and has to comply with a FIC. Also, people who trade in artworks, many of the artworks go far beyond 100,000 Rand that they sell them for. They have to register. Antique dealerships, antique car salespeople, those assets that they sell is far in excess of 100,000 Rand. So those businesses before were not accountable institutions, that they could stand back, but they are now regarded in the Act as accountable institutions, and they also have to be able to say this morning, sitting behind the table, I am compliant with FIC. Okay, so having said that, let's get back to what must I have in place today to be compliant. I've looked at who are accountable institutions, and before I get to the other two questions, I just want to tackle our main question, what must I have in place? I've divided it into 3 things. There's 3 separate things that you must be able to say, sitting behind your desk, I have this in place, to be able to say you are compliant. And before I go on, to say I'm compliant is perhaps wishful thinking in a way. You can never be fully compliant, says the FIC. Compliance is an ongoing exercise. So you put systems in place and you do your business in accordance with that, but you must always have a bell ringing in your ear to say, listen, I need to check, is my system still adequate? And then update it. So your FICA policy, your risk management and compliance program will look like one thing today, and in 3 months it might look different, and in 2 years it might look very different. It is an ongoing process. In fact, the FIC requires of you to note all your updates to your RMCP. So if you had a version that you got from an attorney or from a service provider in January, or one that you compiled yourself and it was dated January 2023, then by June 2023, you must have a version 2, which have been updated with all the changes in legislation since January this year. So your policy you're not compliant at any moment, you're always working on it. But okay, we're answering the question, what must I have with me today to be compliant, at least today? The first thing is that you must have drafted a risk management and compliance program. It's a long word. People will refer to it as a RMCP, but what it is in essence is a policy document and a rule document that you say, this is how I, myself in this business, how we are going to deal with the requirements that the FIC legislation puts on us as a business, as an accountable institution. This is what we do. It's your guiding Bible in a way. So you must draft or have drafted or tweak a draft, but you must have a risk management and compliance program. What must be in this risk management and compliance program? A few things. The most important things that you have to include in there is to know your client. And that's what the KYC stands for. Because FICA says, the whole thing about the FIC legislation is clients interact with us as accountable institutions, and we must, says the FIC, know our clients. Why? We must know them so that we can assess our clients to say there is risk of money laundering or no, there isn't risk of money laundering. If there's risk of money laundering, we are going to investigate that client with a little bit more scrutiny to make sure there is no money laundering. But we must have systems in place, firstly, to know our client, and then secondly, to assess the potential of money laundering with that client in the transaction that we're dealing with them. So the FICA Act prescribes in quite a lot of detail what the RMCP, what your policy document must state with regards to how you do your know your client exercise. And the point there is that the first block and the second block reads with each other. You must know who you're dealing with. So if you've got an anonymous client or a fictitious client or someone who doesn't want to be identified, you're not allowed, in terms of the FIC Act, to enter into any transaction or business relationship with that person. In fact, the FICA Act says that the policy document that you draft must have a paragraph dealing with the fact that you say, if a client appears to be anonymous or fictitious, we will not enter into a transaction with that client. Okay, but let's jump again to know your client. Your risk management and compliance program must have a detailed statement as to how you will go about to know your client. What are you going to do? And not to make light of it, but I used a few fairy tales to just bring the concept home. So in your risk management and compliance program, you're going to say, this is what I'm going to do to know my client. Now, we've got clients that are natural persons, and we've got clients that are entities. Now, firstly, let's look at the natural persons. Natural persons are a little bit like going on a Tinder date. So the client comes to you, and you imagine this is a Tinder date. You're sitting across a table from someone, you're having a cappuccino, and you need to find out something about this client. What's his name? Where do they work? Kind of what industry is he in? Does he own a property? How is he acquiring the property? Does that make sense about the industry in which he works and the salary he's about to expect? You get a picture. You don't know the client before, but by asking some gentle questions, you can make certain deductions. So that's what they want you to do with a natural person. You need to interrogate that person in a way get confirmation, and then you have identified and verified the identity of that client. If it's a natural person, how do you do that in practice? Usually, you will state in your risk management and compliance program that we as an accountable institution will send our clients a questionnaire. We'll ask them to fill in certain details. We'll ask them for confirmation of the details, for example, by providing a copy of an ID, a copy of a proof of residential address, and then we can say we know our client. But in your risk management and compliance program, you must set all of that out. But then, not all your clients, of course, are natural persons. Now what? You would have heard that they say, if you deal with an entity, you need to identify that entity, but you must also find out who is the natural person that controls the entity. It reminds one a little bit of the coach in the Cinderella story. There was this lovely fairy godmother, and there was a pumpkin, I think, and perhaps some mice and whatever was lying around at the time. And the fairy godmother changed the pumpkin into this fantastic golden coach. The two mice became coachmen, and they took Cinderella to the ball. Now, if you see the entity as the coach coming to your offices, entering into a transaction because they bought or sold a property or need advice for setting up a trust, you need to identify that coach. So you need to find out what's the name, where it's registered, where its business is conducted, and what the contact details of the person is who you can contact to find out about the entity and the like. But, says the Act, you must also find out who's controlling that coach. In the Act, they call it, what is the management and control structure of the coach? Now, in our coach, it's easy. It's my two coachmen sitting in front and making the horses run. So that's my management and control structure. But then the Act says, okay, that's management and control, but who really controls this whole thing? Who really has the controlling interest in this coach? For that, you need to find out what it is made of. So you will ask questions and you will find out that there was a pumpkin and there were mice and there were that and that. But you still, if you find that out as an accountable institution, when you interrogate your client or interrogate or ask questions, you still don't know where's the natural person who controlled all of this, because surely the pumpkin couldn't have done that and the mice couldn't have done that on their own. And that's where you ask questions so that you find out, oh, okay, there was a fairy godmother in the back of this. Again, how do you do this? If your client is an entity, you render services to that entity, how do you find out about the pumpkin and the mice and the fairy godmother behind it? By way of questionnaires. You will send a questionnaire. It will have questions asking who's the representative of the company, who manages and controls the company, who has the controlling interest in the company, and the representative of the entity will then write that down for you, and you will have then gathered that information. And what you do with that information, I will explain later, but that is the essence. Okay, so we said, know your client. If it's a natural person, it's a little bit like a Tinder date. If it's an entity, it's a little bit like Cinderella's coach. You need to find out who's controlling it behind the scenes. But the other aspect with knowing your client is this Little Red Riding Hood disaster, because the Act obliges you to check each and every client, no matter if you think that could be high risk or low risk. Each and every client you must check to find out, is it perhaps a wolf lying with a grandmother's clothing in a bed, looking like a granny, but in fact it's a wolf. What am I referring to? I'm referring to the UN list of targeted terrorists. There's a list on the UN website. It's also on the FICA website of known terrorists with whom South African accountable institutions are not allowed to enter into transactions with. So each and every transaction you have to, client you have to check against that Little Red Riding Hood list, the UN 1267 list. In addition, you have to check who is this person in real life. Is he perhaps a connected, influential person? I'm referring to politically exposed persons. Those are local politically exposed persons and foreign politically exposed persons. And you need to find out if your client is such a person. So he sits in a high position in government or in a high managerial position in a municipality or the like, but they have high positions in government structures and in government entities. And if you need to identify that person if it is that, because that immediately means that that client may only be taken on in your entity, in your business, if your management control says you can do so. But it's not only this emperor who's thinking he's looking good because he's got the grand clothes, which he doesn't have. It's also the politically exposed person's close business associates and or family members. If your client is such a person, you need to have measures in place for your entity to pass a resolution to say, we will enter into a transaction with this person. Okay, so that's the first thing that must be in the policy document that you draft. You must say, how are we going to know our clients? And you're going to differentiate between natural persons, between entities. And if it's an entity, you're going to say, listen, how am I going to find the fairy godmother behind this entity? How am I going to find the human being who controls the entity? I'm also going to check all my clients against the UN list of known terrorists and make a copy and put it on my file. And I'm also going to check whether or not my client is a politically exposed person. So that's a whole paragraph or 3 in your document. The next paragraph will be, will you have anonymous or fictitious clients? No, you will not. And there will be a stipulation in your policy to say you will not enter transactions with them. Then comes the next thing that is tricky. The Act says you must do a risk rating of the client and the transaction that the client is entering into in relation to your business. For example, if I'm an estate agent working locally in Beaufort West, the risk rating of the likelihood of my business entering or receiving clients that pose money laundering risk is very different if a branch of that same agency works from Sandton dealing with clients. So what the Act says is each separate business must check in his environment, what is the likelihood, where will I be exposed to risk, and make an own decision. Have a brief summary. It can be 5 points of this is what my potential is for money laundering or receiving clients that are money launderers. This is the profile of our clients. That is the profile of where we work. Then in addition, with regards to your clients, you must have a little bit of a Goldilocks approach. In other words, you must put all your clients, you must rate all your clients in terms of a risk rating. And some, as you can think, will be the porridge is too cold, the porridge is just right, or the porridge is too hot. How do you do that? This is again very personal to the accountable institution. You will say, for example, and this is just an example, that when you have clients who buy a property below 1 million rand, it's 100% bond. and it's local, the person lives in the area where he's buying, that's low risk. If, for example, I have a complex entity, for example, it's a company that has various subsidiaries and the like, that is paying a very large deposit for a property that it is buying in Bantry Bay, for example, and the deposit that comes is in addition is more than 1 million rand, we're going to say that is a medium risk transaction. And then perhaps we're going to say when we deal with foreigners who buy properties for cash in South Africa, we're going to say that is a high risk transaction. So risk rating, you must write into your policy document. It's not hard to do because you can decide for yourself. Listen, in our business, we think that this is low risk. In these circumstances, there could be a higher risk of potential money laundering. And in these circumstances, there is a high risk of money laundering. That's just a risk rating. It doesn't mean that a person who's a foreigner who buys a property cash is high risk and that he is a money launderer. It just says that in that transaction, there is a higher risk or a high risk of money laundering. But your RMCP must make such a risk rating that applies to your business. Okay, so first in my document, I will set out how I'm going to identify my clients. I state that I'm not going to work with anonymous clients, and I state that once I've identified my client, then I'm going to apply my internal risk rating to that client. The other thing that must be in your risk management and compliance program is reporting duties. As a accountable institution, you must report whenever you receive cash at your premises or into your bank account in excess of 49,000 Rand. That changed in October last year. It was 24,999. It's now 49,999. So if it's paid into a bank and they give you proof of a cash deposit, you must report that transaction to the FIC. The bank will also report it. That's your cash threshold reports. You must also, at all times in your transaction, have understanding of your transaction so that if anything suspicious or unusual occurs, that you will consider it and that you will report it to the FIC if you think necessary. So in your risk management and compliance program, you must have steps as to how you're going to do that. You will say, for example, when our accounts department pick up that there's been a deposit or any person administering a file gets a proof of payment that shows there's been a cash deposit, they will refer the file to so-and-so, and so-and-so will make the report to the FIC within 24 hours. Suspicious, you can say, when any file handler becomes aware of any fact that makes the transaction more suspicious or unusual in the circumstances. For example, there's a deposit payable, but it's paid by 3 different companies on behalf of your purchaser or the like, and your file handler finds it unusual or suspicious. The file handler will report that to your compliance officer, and your compliance officer will make a decision whether to report to the FIC or not. He will record it in writing, and that recorder will go onto the matter file that you have in your offices. So your reporting obligations are important, but your risk management and compliance program must set out how to achieve that, what you will do physically in your offices to achieve that. The other thing that must be in your risk management and compliance program is the appointment of your information officer. So it must state that so-and-so is our information officer, and there must be a resolution signed by your senior management to say, we appoint so-and-so as the information officer. Your risk management and compliance program must also set out how, when, and where you train your staff on how to comply with your own policy. So that's a very important component. Your staff must know what to do. And the FIC wants to see how you set it out in your compliance program. So you have to state there, we will do it regularly, every 6 months, or when there's been changes to the act, or yearly, but it has to be there. You must also have a provision in your risk management and compliance program stating what to do with new employees. Do they wait until the next training? Are they trained immediately? But what do you do? The good idea, obviously, is to train them immediately before they work on files, but that has to be written into your risk management and compliance program. Then, lastly, that's what's the last two things is a very recent addition to the requirements of the FIC, is the fact that you need to also do a FICA scrutiny of your existing employees, especially those in senior positions, especially those directly involved in assisting clients and dealing with client transactions. You have to scrutinize them against that UN 1267 list, the Little Red Riding Hood list, at determined intervals, and you need to keep records of that. And then speaking of records keeping in the FIC legislation is very, very important. They want to see a record, and you must state it in your compliance program that you will keep records of the KYC, that you will keep records of the risk rating, that you will keep records of the reporting, that you will keep records of your staff training. So there's two sets of record keeping. The record keeping, the first one is how you deal with clients, all the records relating to that. And the other one is internal, your risk rating of your own employees, your employee training, the reporting that you've done to the FIC. Okay, now I know I played around a bit with Little Red Riding Hood and the like at that first step, but let's just look at it in a little bit more detail, just to get a clearer legal picture perhaps of what we're speaking of. Now the Act says that if you, and I'm explaining this here because your risk management and compliance program must detail this. It must say, when my client is a company, I will do this. When my client is a trust, I will do the following. So let's just look at a company. And remember the company, we had the example of Cinderella's coach. We need to find what the pumpkin is, and then we must find out who controlled that pumpkin. So I need to find the living person who had control. In that example, it was my fairy godmother. But if we look at the company here on the left hand where I've got the circles, if company A is the client that you see, that you deal with, the company is selling, is buying, is seeing you for a service, is buying a bicycle from you that's in excess of 100,000 Rand, company A is your client. What the Act says is find out the details of the company, its registration number, and what its business address are and the like. Find out what the management and control structure is. In other words, in your questionnaire, there will be a question, what is the management and control structure? And the answer will be something in the line of the two coachmen running with a coach. So they will say, no, we've got directors, or we've got an office manager. That is Mr. John, and they will give you that details. Then in addition, you have to find out who's the beneficial owner of the company. In other words, who's the living person that has a controlling interest in this company. So if I have a picture like my circles there, company A, if you ask them who's got the controlling interest, the answer will be it's company B, because they own 75% shares in my company. Then in terms of FIC, your investigation isn't adequate because you must then find out who controls company B. And on questioning or in your questionnaire, then you will say, if company A, if the controlling interest in company A is another entity, I need to find who's the controlling interest in that entity. So you ask the questions, and then you find Helen, who owns 100% shares in company B, which owns 75 shares in company A. So Helen is the beneficial owner of company A. On the right-hand side of the screen, again, board of directors are my management and control structure of ABC Pty Limited. They're the coachman directing the coach. I need to find out who is the who has the controlling interest of ABC Pty Limited. I see I've got shareholders that are natural persons, but no one of them has a majority voting except XYZ Pty Limited. Then my questionnaire has to go and delve into XYZ Pty Limited. It has to do a full FICA on XYZ to say, what is your registration number? What's your business address? And who controls you? And then you find out, oh, there's a shareholder, that's a partnership, but it's 10%. And there's a 90% shareholder, that's James. So James is the beneficial owner of XYZ Pty and is in that way the 50% shareholder in ABC and is in that way the beneficial owner of ABC Pty Limited. This is tricky, but the way to achieve and get to these answers is by formulating a questionnaire that you send to your client, that's a company, and just asking the questions as they appear here. So you will ask, you are company A, who controls you? And if it gives you a natural person, then your inquiry stops there. But if it doesn't give you a natural person, you have to take that entity and find out, okay, but who controls that entity? And you just take it a step back at a time until you find the natural person who actually is the holds the controlling interest in your client. And then you FICA that person. With the trust, it works similarly. The Act says now that you have to do a full FICA, so find out identity and the name and is it a politically influential person? Is it on the UN 1267 list? That whole set of rules, that whole what we described as the Tinder exercise. Do it on the founder, you do it on the trustee, and you do it on the beneficiaries. If any one of these parties is an entity, you follow the steps that you would do in the Cinderella instance. In other words, you delve down until you find your fairy godmother. Similar with a partnership. I need to find out who my partners are. I need to find out who manages the partnership. And if there's a clear manager here, someone who has a controlling ownership of the partnership, I will concentrate on that person, but otherwise I will FICA each of my partners, and then if any of the partners is an entity, I will do my FICA on the entity so that I find the fairy godmother, the beneficial owner behind that partnership. Okay, so I said to you, where must you be today? You must be behind your desk and say, I am compliant. How do I get there? Is because I drafted a RMCP, and the RMCP must have clauses dealing with all of these things, amongst others, but particularly dealing with these aspects, where I set out how I do that. What's the next thing that I must do? The next thing is I must implement the provisions of the risk management and compliance program in my entity. You cannot just keep it on a shelf. You have to share it with your staff. You have to train your staff, and you have to check that they are compliant. In other words, you must do a know your client. Usually that happens by way of a questionnaire. You must collect the supporting documents. You must do a risk rating. Again, that's usually by way of an internal questionnaire that your file administrator will complete. And you will keep it on file. You will make the reports to the FIC when necessary and record that and put it in your office FICA file. You will appoint your information officer. You will do staff training. You will keep records of staff training. You will have attendance registers, and you will keep records of doing the FIC assessment on your own employees. So you can sit behind your desk today. You've got a RMCP and you've got record that you have implemented it. Then you're starting to look very, very good from a FIC point of view. What else? The last practicalities, what you would have done is to register with the FIC on the Go AML website, and the FIC will then issue you with an org ID, and you feel happy, I am now formally registered with the FIC as well. You must formally appoint your compliance officer, so there must be a little resolution signed by your management to say, I appoint John, who's our head of this and this, as compliance officer for ourselves. If you're a sole practitioner, the compliance officer will be yourself, but you will then just record that as well in your RMCP. You must also ensure that your risk management and compliance program, this lovely policy document that you drafted, is formally adopted by your senior management. So you include a clause in that document to say accepted by senior management, and they will all sign there and put a date. You will also have version dates of your RMCP, so that you keep version of January 2023, and then when in June you've got a new version because the laws have changed so much, you say this is version 2, and again signed and accepted by your senior management. And then in other words, in going on, and I've mentioned that you will submit reports to the FIC on an ongoing basis, and you will share changes with the staff and details with the staff on compliance. If you've got that in place, you can actually sit back and say, listen, I am generally compliant. Got a compliance document, my RMCP. I'm implementing what it says in my document to the best of my abilities. And I'm registered with the FIC. I've got an information officer. I've got my ducks in a row. That is generally where you want to get. The details of the RMCP is a little bit tricky. There's a lot of stuff that goes into there and which must be in there, but it's manageable. In essence, if you can just remember, it's like going on a Tinder date. The FIC wants you to find out who's that client, do an assessment on him, and then report certain things if necessary, in a nutshell. And then there's little frills to it, but that you will all have in your document. Okay, so our first question was, what must I have in place today to be compliant? My risk management compliance program, I must be implementing it, I must be doing it, and I must be registered with a FIC and have an information officer. I've touched previously on who are all the accountable institutions, and I said there's a whole lot of them nowadays, much more than there were in the past due to legislative changes in October, November last year. And now I just want to touch on third-party service providers, because we've now seen that to become compliant, and especially this whole exercise to know my client, going through the Red Riding Hood and the Cinderellas and the tender exercise is a lot of work. It takes time, and you might not have the staff complement or even staff with the necessary skill set or time to do that for you. At present, there's a few third-party service providers that offer FICA compliance assistance. Many of them are exceptionally valuable, especially because they've got complicated programs that help with this first aspect of your compliance, this know your client. So if you use those platforms, you will see that it checks a person's details for you. It will check if that person is on the UN 1267 list. It will check if that person is a politically exposed person. If it's an entity, it will do that breakdown. What do they call it? To find out who sits behind the entity. It assists you largely with that. So these third-party service providers, depending on exactly what they offer, can be exceptionally valuable. I just want to give you a warning or a wake-up call in that regard. The FIC itself, if they come to you and say, listen, I want to check how you comply with FICA and the like, they want to see you as an entity engaging with your clients. You as an entity, your staff, dealing with clients directly are the people who can do a risk assessment. They hear what people say, they see what they write, they see the documents. A platform where you fill in details cannot do that. So I think it's very, very valuable to use or look at the services that these third-party service providers can offer you to assist you in making this process a little bit easier. But it cannot ever take over your responsibility to FICA your clients and to do a risk assessment and to do the reporting when something is suspicious, to do the cash receipt reporting into your account, to do your staff training, to do your staff scrutiny. So keep all the aspects of compliance and what must be in your document in your head. And if you use a third party, know exactly what part of compliance they will do for you and make sure that you continue to do the other parts yourself. A third party is unlikely, and I don't know of anyone that can do your full FICA for you. They all say they do the full FICA for you, but they don't. All they do generally, or many of them that I've now seen over the past few months, is just that first one, to give you a detailed explanation or drawdown of the details of the clients that you enter at your company. The rest remains something that you do internally at your company. Okay, and then lastly, we said, okay, what must I have in place today? I said you must have a policy in place. You must have records that you are implementing that policy. And then you can have third-party service providers, but take it with a, be careful of what they say they're going to do for you, what you think they are going to do for you. And then lastly is non-compliance an option. Now, that's a very funny one for two reasons. Most of the emails and the newspaper comments and the articles and talks that you listen to is generally start with, well, if you don't comply, they're going to fine you 50 million or 100 million rand. And if you don't do this or submit that questionnaire yesterday, you can be fined 50 million rand. It's all very threatening. Yes. If you are non-compliant and you ignore the act, knowing that you are supposed to comply, it's likely that the FICA will impose a fine, or they will come down fairly strongly on you and give you at least a notice to say, listen, get your act in order by tomorrow. If you obviously are entertaining money launderers, and for that reason you are not compliant, that's a different thing, and they will obviously investigate you and refer you to the National Prosecuting Authority, and you will be convicted. But non-compliance in this sense is not really an option. You have to comply simply because you are an accountable institution per definition. I get very many questions even from attorneys saying to me, but listen, I've got a non-cash practice. I only do correspondent conveyancing, for example, or I just give advice. I don't really receive deposits and the stuff from clients. Surely I don't need to comply. You have to comply. The size of your business, the fact whether or not you receive deposits, that is not determining of the fact whether or not you must comply with the FIC. The fact that you are fall within the definition of a accountable institution, that fact says you have to comply. And of course, if you have a large business, your compliance becomes more onerous. If you've got a small business and you deal with limited clients, then your compliance is much easier. But it has to be there. You have to have the document. You have to have proof that you implemented it. And you have to register with the FIC on their website and have an compliance officer. I just want to show you some stats. Stats are always interesting to give one a figure of what your colleagues are doing out there. I got this table from the FIC's year report for the year ending March 2022. That's even before all the changes to the Act was introduced. But at the time, you can see attorneys, there's loads of them. There's loads of property practitioners registered with the FIC. There's banks, there's gamblers, there's foreign exchange, travelers, check, trust companies. So you're not alone in tackling this monster. There's loads of businesses out there sitting with the same challenge and doing it. So just join the club and do your utmost. Non-compliance really isn't an option. The numbers on this figure, obviously by the end of next year, will be much more because of the new accountable institutions who have now been brought into the sphere of people who must comply. The other statistic that I just thought I would share with you from their report, and also on the point of is non-compliance an option. You will see that the FIC has been busy inspecting businesses. Legal practitioners, they had 223 practices visited and checked. At the bottom there, Property Practitioners Regulatory Authority, who is a supervisory body for the FIC, they had 201 visits. So they really are busy visiting institutions, checking what's going on, giving advice, issuing directives. So they are engaging with us as accountable institutions and asking us to become compliant. So don't sit behind your desk and think, okay, but they won't come to me. They are busy with it and they will come to you. That is really one of their aims, is to go to the businesses and see what's going on. And you might be on their next list. Okay, so we looked at what must be in place today: a compliance program, a record that I am implementing my compliance program, and registration with a FIC. Those are my main things. What to do if I'm not compliant today? I would stop stressing. There's so much stress and panic in the industry on the moment, and it's, it really doesn't get you anywhere. But start addressing your non-compliance. Phone me, phone a friend, phone a colleague in the same industry. Look on the internet to find people who can assist you with compliance if you can't get those 3 things in place. But just do it today and become compliant as soon as possible. I'm saying this, I can't put my head on a block, but the FIC generally is perceived to be willing to forgive if they can see that you as an accountable institution is trying to get there, is trying to do the right thing. But if you're ignoring it or not bothering with it, they will come down harder on you. So rather engage, do your best. And if they come and visit and say, listen, this is what I've been busy with. And if they then say, no, but you must do more of this or more of that, you say, okay, I will do so. Rather engage than not engaging with them, because that is where your risks really lie, is when they find that you are fully non-compliant. Okay, I think
I'm Maryna.
Sorry, it's been longer than I thought. I was hoping to capture it in something smaller, but I hope that was valuable to you. Got quite a few questions here in the...
Hi, Maryna. Liani here. I'm happy to help you with questions if you like.
Yes.
The first one is just regarding whether, and I think it's specific to estate agent, if an amount is paid by the transferor or the transferee to the attorney, is the estate agent then still liable to report and to note the fact that the transaction has taken place?
That's a lovely question, and something that arises so often. Yes, absolutely. The Act and the guidelines refer to dual reporting. So if it's paid into our account as conveyancing firm, but you as an estate agent gets notice of that fact, then then that fact is important to you when you do your risk assessment of the client, because then when you do the risk assessment, you will see that, oh, in this transaction, my purchaser had 800 Rand, 1,000 Rand available. He's made a cash payment to my attorneys that is that's relevant to me. The dual reporting comes in where we, if the cash was paid at a bank, the bank would have made a cash receipt report and was paid into our account, so I get proof of payment. We make another cash threshold report to the FIC as well. So in respect of that one deposit paid at a bank into our trust account, bank would have made a cash threshold report, and we will make a cash threshold report as well. For you as a estate agent, you become aware of that cash deposit. You don't have to report it as a cash deposit, but it's part of the assessment that you do of the client. It's part of that risk assessment that you do of the client.
Thank you, Maryna. I think that just on that, there's a general question just regarding what cash is defined as exactly in terms of the Act.
Fortunately, for the time being, it's just physical, actual cash. So it's currency, and apparently, even the currency where things are spelled incorrectly. Apparently, on some of the new currency issued, there are spelling mistakes. But yes, hard cash, physical cash,
Money and bills.
Mm.
Yeah. Great. So then. There's also a question regarding travel agencies, whether they form part of accountable institutions, as they do sometimes holidays of 100,000 Rand.
That is a very, very interesting question. I would say no, unless the product that you sell is valued at 100,000 Rand. So if it's 100,000 Rand or more per day, I would say yes, you fall into that category. But if it is 100,000 Rand because you paid 10,000 Rand for 10 days, you would fall outside. What the Act says, if it's a single payment for a single thing, that's 100,000 Rand or more, then you're a high currency, high product value dealer, and you have to be registered with a FIC.
Thank you. There was a comment on whether listed companies on the stock exchange, local and foreign, do they need to be FICA'd?
Generally not, because the JSE themselves have such strict rules that, yeah, listed companies fall outside. We don't have to do a full FICA on them, but we have to write then in your RMCP policy to say, listen, when I deal with listed companies, we're not going to do a FIC because of the regulation that happens to them in any event. Similarly, if for example, in our own RMCP, we state that if our client is another attorney firm, we know that they're registered with the Legal Practice Council, we know that there's certain very, very strict control requirements to be issued with these certificates. So we will apply a standard risk rating to them and not ask the full FICA. But again, everything is almost allowable, provided you set it out in your policy document and you have a good reason for doing so. So the reason can't be because I'm too lazy to do it, but because I know that that listed company is so strictly regulated that we would not need to do a FICA on them.
Great. And then I think one of the last questions that we'll address is whether, is there a minimum requirement or absolute musts that you should include in your RMCP?
Absolutely. That's that first little block that I showed you, is that KYC, know your client. How are you going to do that? In other words, how are you going to identify and verify your natural persons? How are you going to identify, verify your entities plus their beneficial owners? How are you going to, what you're going to do with anonymous clients? How are you going to do your risk rating? How are you going to do your reporting, your information officer? How are you going to do staff training? How are you going to screen your own staff? How are you going to keep records? So all of that are the must-haves in your of your risk management and compliance policy document. But there's a lot of little frills that the app wants you to add that set it out in public communication 53. It's not very user-friendly reading-wise, but they have set out what they want to see in that document. But those are really your main things.
Thank you. I think those are all the questions that that I think we can answer at this time, unless there was something else. I think that I don't know if I missed some that you wanted to respond to, but we're happy to share obviously the recording and the notes afterwards. Sorry everyone for jumping in. I know there was a few people who had problems with sound. Please remember that we will be making the recording available for those who had load shedding problems, sound problems, any other problems. So this will definitely be available, and I know Maryna is also available to contact afterwards. We'll pop her mail in the chat box as well. So, and then I can just hand over to you, Maryna, to end off.
Okay, yes. Thank you everyone for joining. Thank you for the questions. Thank you for the suggestion that we must have ongoing FICA seminars. I love FICA. It doesn't make me popular amongst other people because I think that's pretty strange, but it is something to engage with, and you can come out on the other end understanding where it works. So yes, we'll gladly incorporate that. And yes, Liani has shared the contact information for us for questions. So I'm happy to engage afterwards with that. Keep well and all the best.